So what is your perspective in terms of where there are opportunities left, given how crowded maybe this is getting?
Well, it may seem to be crowded at the surface, but really it's not. If you look at Amherst and the other institutional buyers of single-family rental properties, they comprise about 2.5% of the single-family rental properties in this country. So it's really not a story of the big institutions. It's really much more of a story of the small mom-and-pop investors who may own 1 home, 2 homes, 5 homes, and 10 homes. And that's the vast bulk of the single-family rental market.
All right, so which regions are you still seeing opportunities to buy single-family home rentals?
Well, on the rental side, we see a lot of opportunity, especially in the South, Midwest, some parts of the Southwest. Less opportunity from a rental standpoint on the West Coast and in the higher tax Northeast states. But certainly in those areas, there's a lot of opportunity.
One thing that you're involved in is the whole fix and flip loan. Can you explain what this is and why you view this as an opportunity?
Sure. Well, we are the largest capital provider to the fix and flip industry in the United States. So what we do is we partner with lenders across the United States who make loans to our credit standards. These are loans that are basically for the purpose of buying, rehabbing, and selling, or sometimes refinancing and leasing up single-family homes across the United States.
What kind of returns do you see on these?
Well, typical loans are averaging 9.5% interest rates. For the investors themselves, oftentimes in many markets, they can buy and sell a property and make 20, 30% returns on the property sale.
Are the potential returns shrinking given how much home values have gone up and given the affordability issues that people cite?
We've seen a big change in this market over the past 5 years. If you look at what was happening 5 years ago, people were buying what we would call paint and carpet deals, where you're buying a property, putting in a relatively low amount of work into it, and selling that property. Those deals still exist, but they're a smaller portion of the business than they were just 4 or 5 years ago. So we're seeing the market shift towards people buying properties and adding value, adding another room, turning a single-family property into a multifamily property, expanding the property, and sort of changing the nature of the type of deals that are happening.
There's a question after the 2008 crash. There was a theory before that home values would never go down, and the whole concept of flipping was predicated on that. How do you sort of bake the new reality into your assumption of the idea that home values can go down and there can be a disruption?
Absolutely. Well, we look at every single deal that we finance to make sure there's an embedded profit margin in that transaction. So on average, maybe someone's buying a $200,000 house in Cleveland, Ohio. They're putting $50,000 of work into that transaction. They're selling for $325,000. So there's a lot of room for values to go down before that loan ultimately comes bad. For us, we're a lender, or we're ultimately buying loans. So our average loan to value is about 65%. So there's a pretty significant cushion between what the expected profit is in that transaction and ultimately where a loan attaches.
How far away are we from a more significant downturn in the housing market? Perhaps not akin to what we saw before, but just where you see values plateau and decline?
I think generally, and there's 50, probably maybe even 500 answers to that across the United States, because real estate's a very market-specific answer. But across the U.S., we see a long time we've underinvested in our housing stock. We haven't built new housing in this country in a very long period of time, certainly not at the rate of population growth. Interest rates are low, mortgage rates are very low, and they aren't increasing right now. And employment is high. So all those three factors mean that we feel pretty good over the course of 2020 with regard to the housing market and don't see a major correction happening in the near future.